Business. Kenya's private sector continued to struggle in June, with businesses reporting lower customer orders and reduced output for the second month in a row. But even as current conditions remain tough, new data shows that confidence in the future is starting to rise. Dennis Otieno has the details.
It was a tough end to the first half of the year for Kenya's private sector. New survey data shows that businesses saw a sharper drop in activity and customer orders in June, driven by weak demand, tough economic conditions, and disruptions from ongoing protests. The Purchasing Managers Index, or PMI, dropped to 48.6, well below the 50 mark that separates growth from decline, and the lowest reading in nearly a year. More than a third of businesses surveyed reported fewer new orders. But despite the current slowdown, there's growing optimism. Sentiment about future business conditions hit its highest point in over a year as firms looked forward to better sales and expansion opportunities. Jobs were also a bright spot. Companies continued to hire, with staffing levels rising for the fifth month in a row. And with road congestion easing, delivery times improved at the fastest rate in nearly 2 years, though some delays were still reported at ports. In a sign of renewed confidence, businesses stocked up more aggressively, pushing inventory levels to the highest since late 2022. But actual purchasing activity fell sharply as firms remained cautious due to sluggish sales. On the pricing front, rising wage costs pushed input inflation to its highest level since January. Still, most businesses held back from significantly raising prices for consumers, fearing it could hurt demand. Dennis Otieno, Citizen TV.